You are listening to Mining Stock Education.
And the miners, they're technically overbought. I mean, they're due for some consolidation and some correction, and I agree with that. But the weakness should be bought, in relation to how much money they're making, especially. I mean, we're about to end a third straight quarter where margins are close to 50% on a lot of these companies. So they're making gobs of money.
It's Mining Stock Education, and I am your host, Bill Powers. Thanks for tuning in. And in today's show, you're going to hear from David Erfle from Junior Miner Junkie with Y.com, my friend and newsletter writer. And David, thanks for coming on for your monthly MSE interview and update for my listeners. What about the gold and silver price since we last talked? What's your general commentary of what you're seeing in the precious metals price?
Yeah, thanks again for having me on. It's always nice to catch up with you every month here. It's, the perfect storm in gold just continues. The geopolitical risk now is really ratcheted up, and the debt situation is really keeping it elevated. Everything that the government tries to do as far as bringing down the debt, they say they're going to bring it down. When Doge came out and Elon Musk came out, they said, "Oh, we're gonna fix this, and we're gonna do something about this debt situation." They can't do anything about it, and it just gets worse. And with now the U.S. attacking Iran's nuclear facilities, that's not good. The geopolitical situation keeps getting worse. And now, worried about the Strait of Hormuz being shut down, and the price of oil going much higher. Gold didn't have much reaction to the strike because it was basically expected. The U.S. controlled all the airspace around there. They pretty much controlled everything. And it was only a matter of time before they were going to do it. So the market had pretty much priced it in. But, with the situation in Ukraine, Russia and Ukraine, the dollar can't get out of its own way either. It continues to go down. I mean, gold, let's face it, gold is the safe haven of choice. It's replaced treasuries as a safe haven. If we take a look at what's happened with the silver price is now finally starting to catch up. We had that major breakout above 35. 35 was that, line of resistance for such a long time. And the silver price, like 2000, was that line of resistance in gold. And so now the silver price has broken out above 35. It's closed above 35 on a weekly basis. And what's interesting is we have the quarterly close is coming up here pretty soon. The quarter is going to end next Monday. And the silver price has never had a quarterly close above 37.50. And it's consolidating its recent gains around 36 right now. It's creating this bull flag. So and that gold silver ratio, when it shot up to over 100, I mean, that was super rare, right? I mean, when you see the gold silver ratio at over 100, that just screams buy me in silver. There's the last time it happened during the pandemic, and it rose up to 124 to 1. And then right afterwards, silver went up, like 140% in 4 months or something like that. I mean, it just went crazy. So silver is, silver is related also to the gold stocks. If you take a look at the GDX and GDXJ charts and look at the silver chart, they pretty much have been trading in lockstep and basically lagging the gold price for so long, and now they're starting to catch up. So miners are catching up, silver's catching up. The retail investors have finally discovered this sector. So you're seeing sector rotation. I mean, everything's it gold's back. The wind is really at gold's back now. Before that, it seemed like everything was conspire against gold, right? We saw the gold price rising, but we didn't see silver rising. We didn't see gold stocks rising. People gave up. A big give up was when the silver price had that big, huge false move down. In April, when we had that mini panic in the stock market, and a lot of people just threw up their hands and said, look, I'm done with this sector. I've seen the gold price continue to go up, and silver and miners aren't joining the party. So I'm out. And that was a big mistake, because that was the false move that basically created the energy for the breakout. the precious metals market is gold and silver, especially. They're famous for false moves, right? We have this false move in the opposite direction. It gets everybody out and then reverses it and breaks out. It's happened time and time again in this sector. It's really looking good now, especially for juniors. Investors are moving down the food chain to getting into higher risk stocks now because they missed the boat on a lot of these majors and a lot of these mid tiers and royalty companies, and even some quality juniors that have already broken out and have already risen quite a bit. So they're moving down the food chain into higher risk juniors that are mostly optionality plays, or they've got fantastic projects that they're in an earlier phase, like a PEA stage or a mineral resource phase. And investors are moving down the food chain. So they're taking their profits. Some are taking profits in what they've already made considerable gains on, and they're rotating them down in the higher risk juniors. I've done that myself with a couple of stocks that I recommended to my subscribers. One, a PEA stage company, is already up 30%, but I recommended 3 weeks ago or so. So that's where the value is now. It's in these higher risk optionality play tune. I think we probably talked about this last month. If we did, I'm sorry if I'm repeating myself.
No, but I have a question along the lines of what you just brought up.
Sure.
So 2 weeks ago, somebody asked me to look at a certain company, a silver company, and there's a resource in the ground. And of course, the company would talk about the expansion possibility. I actually owned this company back in 2016 when I didn't even really understand the junior mining markets. I think it was a 3 or 4 bagger for me, just because silver went from $14 to $21 at the time.
And the company had silver in its name.
Exactly. Yeah, they did. And they had silver in the ground, to be fair. But, so then when I was asked to look at it again, I was reading through the management discussion and analysis, okay? And the guy at the helm, I have no anything against him, but he's been there, Dave, for 20 years. 20 years. Okay. So he's had 20 years of salaries. And then I'm just asking myself, like, for what they have, like, is what you paid the
like
guy
a lifestyle company to me.
Okay. Like, so I had a problem with that. And the share price, it was lagging. It was, a laggard relative to a lot of the other silver juniors that already moved. Okay. But then just recently, then they announced this huge financing. Now they're going to be cashed up. And what does it do? It bounces off the bottom. So then when I saw that, I was like, does your intelligence, it keeps you from certain things at certain times, but depending on the phase of the junior mining precious metals bull market, can your previous experience and even insights keep you from some profits, easy profits that perhaps you should take advantage of at the same time? Any thoughts here, Dave?
Well, I mean, you're talking about a situation where retail's in now, and if retail's in a big way, we're still not there yet. They're starting to get, they're sniffing around the sector now, but
and they're only looking at ounces in the ground. Dave.
Exactly.
They won't read anything else.
Right.
Yeah.
Right. Exactly. So, it depends what phase you're in. I mean, in the past, I went for companies like that, even knowing that, wow, this is a lifestyle junior, but I know they're good promoters, and judging by the chart, it looks like I could probably get a quick gain out of that. But I don't think like that anymore. Because I have subscribers that are following everything I do, and it's a buy and hold service. It's not a trading service. So I'm not going to invest in a company unless I'm 100% sure that I've done all my due diligence and I'm comfortable with management and they're doing the right things. They're raising money at the right times. They're not paying themselves too much money. The project is good. They've raised money at the right times, and they're mindful of dilution. That's a big one. Being mindful of dilution, especially, when you're talking about a company like you're talking about, I would imagine that they've probably had to deal with a lot of over dilution. It sounds like that their project's probably marginal, and they've been lagging the sector, and they've been probably raising a lot of money at lower prices and over diluting the stock. But now that it's got down to a certain level, it's gotten so oversold, and they announce a financing, and they've got some money in the bank, and they're actually going to try to revive the market to their project. That, hey, it looks like it could probably move a little bit, but I still wouldn't touch a stock like that. No, if that's your question.
So when you have a laggard in your portfolio, Can you talk about any laggards? And when do you decide to sell a laggard, especially in a bull market when it's just not performing? Like, you could look at Barrick versus Agnico Eagle, and it's like, why would you hold Barrick when you could own Agnico Eagle, right?
Right.
On the juniors, apply that to the juniors maybe for us.
Sure. I mean, I've done that because, I've been accumulating these juniors in a long time for the past several years and waiting for this breakout. My subscribers and I have been very patient, and I think I've done a pretty good job of weeding out the bad companies and only focusing on the good companies to accumulate the right ones. And basically, what you do is you can't make a decision based on FOMO. It has to be meaning like, okay, here I've got this laggard. It hasn't moved yet. And yet look at this company on my watch list. It's already gone up 2-3 times. I'm going to sell this laggard and I'm going to chase this other one. That is a bad mistake. I mean, you need to sell a company based on company fundamentals, not on sector fundamentals. Right. I mean, because I've made all these mistakes. I know. And, during the past bull market, I got into something. I did all the due diligence, and I said to myself, well, I must have done something wrong because the stock hasn't moved yet. But the reason why it hadn't moved yet is because I was even earlier than some of the other smart money out there. And I did the right due diligence and I got into the right stock. I just lost patience. And it turned out, I left a lot of money on the table by losing patience. So you have to make your decisions. They have to be company specific decisions. I'm like, why is this stock lagging? Is it something the company's doing, or is just the market hasn't caught on to their story yet? And if it hasn't caught on to their story, why not? Is the company not marketing their project? Or is the reason it hasn't moved yet is maybe the company has over diluted the stock and there's a lot of warrants there, or maybe they haven't raised the proper capital enough yet to where they could do the work they need to do. If they haven't raised capital now in this environment, then there's something wrong. Definitely something wrong with the project. And if they have to raise capital and offer a warrant, that could tell you there's something wrong with the project too, because you should be able to raise capital now if you've got a quality project without having to offer a warrant. Of course, depending on where you are in the cycle of the project, but especially if even
for Explorcos though, Dave, because I saw a lot of.
I was just going to say for Explorcos, they're still going to have to offer warrants, but I'm not even delving down into Explorcos. I'm still ignoring them. I've been ignoring them for a couple of years now.
Because you see too much value in developers still? Is that why?
Yeah, because there's just too much value in companies that have already discovered something and they're de-risking it. And especially if you've got a company that's made a major discovery, they put out a resource, and maybe they're about to release a PEA or updated MRE that'll go into a PEA, and they're still drilling for more to basically show proof of concept that this thing is a monster, right? So that's the ultimate situation you want to look at right now in this environment we are in this sector. Because if you're looking at companies that have already proved up this monster deposit, they're at the feasibility stage, they're at the finance stage, and it's a fantastic project, chances are their stock has already ran. And sure, there's probably a lot of upside left, but not nearly as much upside as companies that are earlier stage, to where they're at the PEA stage, or they're about to announce a mineral resource update. They've already announced a resource. They're about to update that resource. And what they do is usually when they put out an updated resource, and they use that to go directly into a PEA. So those companies I think that's the sweet spot right now. I think there's a lot of companies out there right now that have still not been discovered by the market yet, that are waiting to go a lot higher.
So Dave, I invested this year in a sub $10 million market cap of a company with a historic resource. So there's precedent there, but with expansion potential. So they, of course, for modern markets, have to re-drill some of the same holes essentially to update the NI 43-101 statement. Now, when you see that, how do you view historic resources? Because you know the mineralization's there, right? They have the holes, even if it's not compliant, and perhaps the market is giving it an undervaluation because it's not compliant, but the mineralization's still there. It's still discovered.
And the company's doing, and the company's drilling right now to update that to be compliant. Yeah. Yes. I mean, that's a great situation. You want to look at a situation like that for sure, because the market is not giving them value for the ounces because they haven't been updated yet. But we know the ounces are there. So yeah, I mean, that's a great situation, especially if they're, fully funded to do that. And then they say they're about to issue a PEA. And yeah, I mean, and plus a lot of these companies now, what they're doing is they're going directly from PEA to feasibility. They're skipping the pre-feasibility because that saves them a lot of money. And they do a lot of compliant feasibility drilling into that PEA. So that saves them a lot lot of time.
They may not be able to get their permitting done depending on the jurisdiction within that time frame, though.
That was where I was going with it. Depending on where they are, what jurisdiction they're in, they also have to worry about the permitting. But as you've seen, I mean, you can't turn on your computer and look at the news lately without seeing a positive story in North America about fast tracking permitting. I mean, it's all the rage now. These provinces in Canada, they're fast tracking permitted. The U.S., since the Trump administration, they're fast tracking permitting. So that is huge because, it's been taken up to 15 years from discovery to produce to production, 15 to 20 years now in Northern California to produce gold after discovery. I mean, it's just too long. There's too much red tape, and they're realizing that. So, then you go to Africa, and the government owns part of the project, and they're saying, well, how come you haven't gotten, how come you haven't started mining yet? Well, you haven't given us a permit yet. Okay, here's your permit. I mean, it's super easy to get a permit. I mean, my biggest gainer this year is Montage Gold in Côte d'Ivoire. They've been able to go from discovery to construction in less than 10 years. So, and they're fully financed to production, and it's a hub and spoke approach. So they're also drilling on the property. So they're making it bigger while they're already fully financed to production. And I think they're 25-30% finished with construction now. And the stock just keeps going higher.
When do you sell that one? Do you want to just capture those profits? When do you capture those profits?
Yeah, my subscribers and I, what basically my rule is before I get into a company, they have to have at least 3 times upside potential. I won't touch it unless it does.
Within 3 years too, right? You got to put a time frame in.
Yeah. It's taken a while longer now for a couple of them. Once Montage tripled, my subscribers and I, we sold a third to take out our investment capital. And we're basically, the main goal is when you buy a junior is you want it taken over by a major. So sell a third once it triples and then hold the rest and wait for a takeover. Or, the company could also just like Artemis is doing the same thing. They never got taken over. They're now in production, and they're a production company. So, and their market cap is over $2 billion, I think now. So, the risk of that the possibility of that company being taken over by a major is farther away now. So, but that's the ultimate goal. You want these things taken out at a premium, preferably at much higher prices than what you pay. You don't want them taken out too soon, but because you want them to run a while before they get taken out. And Montage is the perfect example of that. I mean, we're up 600. We're up 600% on it.
Did you invest before the financing capex for that project, or where did you invest in relationship to?
I got into it super early before the management team took over. The new management team took over. The previous management team, the same management team that was associated with Redback Mining, the Tossist mine. That was Redback sold for $1,000 an ounce in the ground back during the last bull market, 2011. It was basically one of the stocks that rang the bell that, hey, this is the top. When majors are buying ounces in the ground for over $1,000 an ounce in risky jurisdictions, the top is pretty much here or very near. So this is the same management team, and now they've different management need has taken over. A production management team has taken over. So is there a possibility this gets taken out still? Absolutely. I mean, but Lundin is involved now. They're a big shareholder. Barrick is still a shareholder. I think Endeavor Endeavor Mining might still be a shareholder. So this is a stock that if a major bids on it, I think there could be a bidding war. That's what you really want to see. You want to see a bidding war in your stock. You just sit back and wait and see who wins the bidding war. So a company like Montage, yeah, we're sitting pretty in that one. So it's risk free for us now. We've taken our investment capital off the table, and now we're just hoping that the stock gets taken out at much higher prices while the share price continues to rise here.
Any other winners in the last 6 months that you've had, and how did you play it in terms of taking capital off the table and letting some run? Yeah,
we've had plenty of winners. This Montage is in my J&J top 10. The two other companies in my top 10 are close to tripling from our entry point. One is Skeena Gold and Silver. It's funny that these three companies that I'm mentioning, they're in various stages of takeover potential, right? So in Montage's case, they're constructing the mine. In Skeena's case, they were able to raise the money to fully finance the mine well ahead of them being even fully permitted. They haven't gotten their environmental permit yet. They're expected to get it by the end of the year. And the stock just keeps going higher. I mean, I think it's rising.
How is that bankable though? How can you raise the entirety of a capex without a permit? I mean, I thought it was a bankable financing.
Yeah,
no?
It's amazing. But the project is so good that they were able to do this. Not only that, but the debt financing, they were able to get a fantastic debt financing package that they can back out of anytime they want at no penalty. So they did the debt financing, when interest rates were higher back last year. So they can wait and maybe get better debt financing down the road and back out of it with no penalty. And they also did something else very wise. The first 5 years, the project is going to produce, it's going to be it'll produce so much silver. It'll be in line with the top primary silver producers. That's how much silver it's going to produce. So they did a small gold hedge instead of a silver hedge, so they could have all that exposure to the silver price. And the silver price has gone up so much, and the silver sector has been on fire as far as projects are concerned. I mean, primary silver mines are owned by juniors are being snapped up by majors, right? First we had First Majestic take over Gatos Silver, right? And then we had Coeur d'Alene take over Silvercrest. And recently we had Pan American Silver take out Mag Silver, who owned 44% of the Juanicipio mine. So these majors, they understand how rare these projects are. So they're going after them. So
the mining journal called SK Creek.
I was just going to say, yeah.
So, okay. Do you believe that the number one
absolutely
precious metal?
You
believe that
when it was in operation? It's a brownfield project, right? It was in operation before when Barrick owned it. It was one of the highest grade silver mines in the world, if not the highest grade gold mines in the world. So this is a fantastic project. And by the way, the tailings facility is already permitted. So. Like you said,
that's an accomplishment in BC, right?
Exactly. So, and you see BC, I mean, they've already named SK Creek as one of the projects that they're going to fast track. So they've named 18 projects that they're fast tracking. So these governments, they understand that they got to fast track these projects because they need the metals. So I think that, when you ask me how could they get finance before they got, that's how. because there's all these inroads.
So the government's essentially given the head nod, even though they haven't officially issued the permit.
Exactly.
I guarantee you the banking people called the permitting people off record.
Right. And then my third stock, you asked me for 3, is Vizsla. Right. That's in my top 10, and that's close to tripling. Well, it was until today they announced a financing, which is a fantastic financing. They got another 100 million bot deal financing at $3. So they're going to be announcing a feasibility study at the end of the year, and the capex is expected to be what the PEA capex was, which is only 224 million. And once this bot deal closes, it's going to close on Thursday already. They're going to have I think like 209 million cash in the bank. So they'll be close to even having the capex in cash. And they're targeting the feasibility study by the end of the year. And they told me that they're working on a $200 million finance package that may be announced concurrently with the feasibility study later this year. This is a fantastic project.
What's the build out on that? That's underground. What's the build out?
Yes, that's underground. That? Yeah. I visited this project several years ago and immediately.
Is it a 1 year build out after the investment?
Yeah, they're supposed to be in production by 2027. Yeah, they're expected, not supposed, they're expecting to be in production by 2027. So they've got a fully permitted bulk sample mining test operation. So yeah, that is a fantastic project.
And have you captured, turned into cash some of those gains in that stock, yet. Or is it unrealized?
Like I said, it's close to tripling, and then it's finance. Which is fine with me. I mean, I have no worries that the stock is going to triple. So when it does, like I said, we'll sell 1/3 and then we'll hold the rest. And they're in a great situation as far as, because they could, if a major wants to buy Panuco, they can, instead of buying the whole project. Buying the whole company, they could spin out the rest because they've accumulated all this land around near the project as well. So they've got other projects that they could spin off, that they could do what Silvercrest did, right? They held out for that project. They held out before when the first Silvercrest buyout was announced. Eric held out. He said, I'm not gonna include Las Chipas. I want this. This is going to be my next multi-bagger winner. This is going to be my next winner. You can't have this. So, and he was right. They kept Las Chispas, and he did it again. So
Silvercrest was 10 cents, Dave, when I first looked at silver June. 10 cents a share. Yeah. That's one of the ones that actually went all the way and made it, and then got bought out after in production.
Eric played his whole hand brilliantly there. You really got to hand it to him.
With Eric Sprott, he has his losses, but he's got such huge wins with Kirkland Lake, or you mentioned Silvercrest, that those wins, this is what Rick Rule said, by the way, in our last interview on the show. He said that Eric says, when my wins win, it covers all my losses, and some of his wins are just so humongous.
Absolutely. When you got a bankroll like that, it's lunch money to him. Some of these small companies that he gets into. So a trap that a lot of newbie investors get into is they see Eric Sprott as this billionaire, and he invests in all these companies and he makes all this money. So whatever he invests in, I'm going to invest in. That could be a bad strategy, because, most of the companies that he invests in, they're going to be losers.
He's his own ETF,
right? And fortunately,
this
time he bought a lot of these companies outside of his ETF. Because when he bought during the first bull market, he bought a lot of those companies. He bought into a lot of those companies via the ETF. So he ended up having so many redemptions that his sales made the bear market even worse. So he was fantastic for the bull market, and he was worse, and his actions made the bear market even worse.
Dave, let's point out then for listeners an action point when they're doing their due diligence about the share registry. When they say, we have 20% institutional ownership, you better ask the question, who are the institutions?
Exactly. Right.
And can they have forced redemptions?
Yes.
What's the lockup period?
Yes.
Yeah.
Yes. And tight share structures, they work both ways, right? In bear markets, they could destroy a stock, and in bull markets, they could just absolutely rocket the stock. depending on who owns the shares, right? So, I mean, there's all these things that you gotta take into account before you get into a stock, and just buying something that Eric Sprott buys is not a winning strategy.
Well, let's end on the JMJ, Junior Miner Junkie Sentiment Indicator, as expressed by interest in your subscription, Dave. Like, what have we seen in the last 30 days?
Getting better. It's getting a lot better. Yeah, it is. It's I'm seeing a lot more interest. So, but not as much as you would think.
Is it still a stealth bull market, even though gold is making national headlines?
I don't think it's stealth as far as resource investors are concerned, but I still think it's stealth as far as retail investors are concerned, because they're still doing well in AI and crypto, right? I mean, sure, you've seen some sector rotation, but not a lot. But just look at the volumes, right? I mean, if you take a look at the volumes in GDX and GDXJ, they're still not anywhere near where they were back pre-pandemic. So the volumes are still pretty low. It's starting to rise now in the TSX Venture, right? The TSX Venture is really interesting because it's starting to break out now. It's starting to lead. It's beating the stock market. It's beating gold. It's beating everything now. So that's what you really want to look at, because that's where the speculative capital is. I know it's only, 50, 60% miners, but still that's where the speculative capital goes. And speculative capital goes to silver, and it's silver and gold juniors. So, but if you take a look at a long-term chart, it's still got a long way to go. I mean, it's still 78% below its peak reached in 2007. And gold in 2007 hadn't even reached 1,000 yet. So, I mean, we got a long way to go in this bull market.
Rick Rule is saying it's the 70s all over again. It's a confirmed precious metals bull market, and we got a ways.
I agree with that, but we have a lot more competition. In the 70s, we didn't have much competition, right? We didn't have Bitcoin. We didn't have AI. I mean, we didn't have we didn't have gold ETFs.
But isn't human psychology the same?
Oh, yeah. Human psychology is the same. I'm not poo-pooing what he's saying, but I'm just saying we've got more competition now, but still.
Do we have more competition for hard assets, though?
Yes. I think. I'm sorry.
Because is Bitcoin a hard asset?
Oh, no, absolutely not. No, Bitcoin's a speculative vehicle. It's just, I mean, it's just speculation, because you can't, I mean, as far as Bitcoin is concerned, I think it's a bubble waiting to pop. But your one caveat to what Rick says would be that there's more supply to soak up the coming demand. That would be the one difference between now and the 70s, where you might see that. Yeah. I mean, but if you want to compare another comparison for the 70s, I mean, the as far as participation is concerned, it's the same. I mean, in the 70s, the participation got up to, I think, to like 8-9%. It's still below 2%, maybe 1.5% even, I think. I mean, if you take a look at asset allocations like ETF, gold ETF, especially minor ETFs in relation to market ETFs, it's still less than 2.25% as far as who's in the mining sector. And in gold, it got up to 8% back in 2011. It got up to 8%, and now it's still below 2%. So there's still, I mean, it's been, mostly central banks that have been levitating the gold price, and now finally retail is joining the party. And, and the reason why we had silver and the miners lag is because central banks don't buy silver and they don't buy miners. But now miners aren't lagging anymore, but a lot of these juniors still are. Sure. And the miners, they're technically overbought. I mean, they're due for some consolidation and some correction. And I agree with that. But the weakness should be bought, in relation to, how much money they're making, especially. I mean, we're about to end a third straight quarter where margins are close to 50% on a lot of these companies. So they're making gobs of money, and they're going to have to start looking for, investors are clamoring now for more ounces, right? You short up your balance sheets, great, right? You're paying dividends, great. You've, you're buying back shares, great. Now you need to add ounces, and to add ounces, they got to buy up more juniors. And I think you're going to see a big M&A wave start, I think, pretty soon.
Well, Dave, it's been an enjoyable conversation as always. If you're new to David's service, go over to Junior Miner Junkie with a Y. Check it out. He'll give you a free weekly email on Fridays with some commentary on the gold market and also the junior mining market. And if you want guided service for how to navigate the junior mining stock markets, Dave also offers that paid service. You get to look over his shoulder, see what he buys and sells. As always, Dave, thanks for coming on the show, and we'll touch base with you in about 30 days.
Thank you, Bill. Always a pleasure.